Alright guys, what's up? We're going to be doing a full week back test here, and this is once again more of a chill stream. I'm just going to be going through possible trades that you could have taken this week, and we're just going to be looking around on what happened. So yeah, once again, more of a chill stream here today. As you can tell, because I'm just sitting on my bed. But I am listening to music as well, so there was something I saw from, I don't know when it was, but I remember seeing it and I was like, wait, that was kind of a nice trade. I'm gonna try and find it. Oh, this. Actually, is this that nice? There's an external gap. What I was thinking is equal highs here. There's not SMT. Okay, just kidding. I actually don't think it's that good. Oh yeah, this was Thursday, huh? Yeah, so we had the equal highs here. Dang, this happened like twice where we had a soup above equal highs and then another soup above equal highs. So interesting. Did we ever come back for this? Oh yeah. We came back for these equal highs on Friday. Hey, what up, VR, Raj? How's it going, bro? We're just getting some back testing in. Trying to figure out what I want to look at here to start it out. I just got on the charts here. Man, look at that trade. If is that not the most light bulb inversion you've ever seen? I'm so happy I took that. That is just so obvious. There was another inversion that was pretty light bulb from Wednesday. That we got to go back and look at this because I actually missed an opportunity with this on Wednesday. And the more I was looking at it, the more I realized just how bad I messed this up. So I want to go look at that. And it's when I took that short on Wednesday that was break even. There's the one loss I took this week. All my other trades were wins. And the one loss I took was on Wednesday, and it was a really bad trade. Right? So what happened? We had here, I think I've backtested this a bit actually, but we had um, market open lows. Um, we got SMT here. So you can see there's SMT with this low. Yeah, I did backtest this a little bit, but not all the way. So we had an old bearish SMT with YM. And a new bullish SMT with ES. And when we get a new SMT, it overrides the old SMT. I think I've backtested this day a bit, but I don't care. Yeah, look. is very nice Venom model. Souping market open with the 22-minute SMT. Oh, let's also pull up SB Pro X. But I guess what I'm thinking is this inversion, just taking this as an inversion for value gap, isn't that bad. Or even taking this on a first presented for value gap inversion. Dude, I backtested both of these, huh? I backtested both of those trades. I backtested the Venom model and the inversion of the first presented for value gap. See? I already looked at this. Oh, so maybe I should look at something else then, because I already looked at this. Yeah, I did. See this? Venom, IOFED, and then first presented for value gap inversion. You can't even see the trade that I took. You can't even see it. What? What? Because remember there was an outside bar here, supposedly. Anyway, that trade was obviously pretty bad then. I can't even find it. So we'll mark out that inversion for value gap. I think that was pretty textbook. Souping market open lows with magneto effect. Once again, what's magneto effect? Where you have the old SMT, which becomes the drawn liquidity once we get a new SMT. And I like to mark it out with like a whole bunch of lines. So this is the new drawn liquidity. See that? And we get SMT, souping the true open. This is also souping market open or sweeping market open lows. Interestingly, we also get a propulsion block that closes right here. We could take a look at that as well. I'm really liking propulsion block closes and taking that. It's an interesting way to trade. I'll show you guys. So you could take that inversion like this. That's 3R right there. Bang. So nice. You could have even had stop there, honestly. But that's all personal preference. I already know that there was absorption there. So that's not bad. Also, it's the macro, right? We might have got a precision swing point at that low. Did I mark it out yet? I did not. I did not mark out whether there was a precision swing point. Dude, I bet there was. What day was this? My back kind of hurts. I don't know why I moved that pillow. Jake, can you explain propulsion block? Yeah, of course, bro. I got you. I got you. I'll explain propulsion block. Let me finish journaling this trade real quick. But propulsion block, the more I get like down the rabbit hole, the more I realize how important propulsion blocks are. That's when you're gonna get all the explosive moves. So I'm gonna explain propulsion block in just 1 second. So, okay, March 11th. This was Wednesday, right? Yeah, so 9:53 inversion for value gap. Inversion for value gap on the 1 minute. And let me also really quickly just mark it out as possibly you could have entered on the retest as well. That'd be 6R. Well, it depends on how you take it, but and then I'm gonna explain propulsion block. Just hang on. Okay, so propulsion block is an order block. I'll explain order block as well in case you don't know what order block is. But propulsion block is an order block that is delivering from another order block. So this will become very obvious on the 30-second here. So let's scroll all the way over, and I'll explain order block. So an order block is the last down close candle or series of down close candles before the move higher, right? So this is really the first move higher on this chart when you're looking at, like, from what you can see on the candles on the screen here. Let's make this big. So this is really that first move higher that breaks this high or whatever, right? This is just the clear displacement leg. So what we look for is the lowest down close candle or this entire series of down close candles or even just the bottom two down close candles. All of these are considered order blocks. This whole thing prior to this move higher, all of these are order blocks, and you can see how the market first, well, it doesn't actually tap this one, but measured out like that, it holds that, right? And interestingly, I bet if we go to a 15-second, it will probably hold. So we're going to go to a 15-second real quick, and I'll show you. So, because we're going to get an even more precise lower time frame view here. So, okay. So, on the 15-second, here you go. It's very, very obvious, right? The 15-second. What's the down close candles or series of down close candles on the 15-second prior to the move up? It's also that takeout market open lows. It's this, right? So this is the order block. Then we actually have another one delivering from the initial order block. So let me show you. So let's mark this out as an OB. This out as a PB. Actually, I think it is better on the 30-second. Or maybe it's best on the 1 minute. Yeah, this is best on the 1 minute. So down close candles before the move higher. Okay, this is an order block. The market pushes down into these two down close candles and almost taps this one, which is also an order block. Then we get another order block off of it, right? So down close candles before move higher, down close candles before move higher. It uses this, it uses this. When we get a close above this down close candle, validating this one as a propulsion block, that's a valid entry for longs, and it's going to be a very explosive entry for longs. Check this out, right? And I would put stop loss below the propulsion block because I know that the market, if this propulsion block is going to work, we're not going to go underneath this propulsion block. You could even go a little more aggressive too, because we really should not dig very far into this propulsion block. So order block, down close candles before move higher, propulsion block, order block that digs into another order block. Boom, there's OB. So I guess it was best on the 1 minute. And then here's PB. And bang. And then enter on that close. You can project out the propulsion block. You can see we go perfectly 8 projections. See that? It's pretty cool. We do not retest the propulsion block though, so you unfortunately do not get 8R. You really only get, what, 5R up to that? And I probably only take it up to here anyway. So hopefully that made sense. Dang, I must have measured it out badly, huh? I'm not gonna lie, I kind of just want to sit at my desk. Jake, where can I find your projection settings? I want to learn more about projections. Thank you for explaining the blocks. Yeah, of course. Yeah, so my projections, I do them differently than everyone else because I just use common sense. What even is a projection? What's the point of it? Genuinely, just think about it. What is the point of a projection? It's just a logical place for you to take profit. That's going to align with liquidity. The projection itself doesn't mean anything. It doesn't. People will say, oh, the projection means something. No, it doesn't. The projection doesn't mean anything. It's just helpful for aligning what liquidity pools are likely to be valid, right? If there's perfectly equal highs exactly for projections above from where I project out the order block, I'm going to know that that's a pretty high probability liquidity pool, right? If it's three projections perfectly, I'm going to know that's a high probability liquidity pool. If it's 6, 7, right? 6, 7, 6, 7. If it's 6 or 7 projections, I'll know that's a high probability liquidity pool. It's all about identifying high probability liquidity pools, right? So what I've realized from my back testing is you can pretty much use anything you want for projections. So I do all the numbers 1 through 8, and basically, obviously, ICT says 4 is going to be your typical max extension, but on an explosive move like this, you can see actually we can go all the way up to the 8th or 7th projections. And with propulsion blocks, that'll a lot of the time be the case. So projections, they just help you identify strong liquidity pools. And you can honestly project out anything. Like you can project out a rejection block, you can project out a propulsion block, you can project out a breaker, you can project literally anything from your entry to your stop loss, because if you think about it, anything from your entry to your stop loss is going to tell you exactly, if it's 2 projections from your entry to your stop loss, it's going to be exactly 2R. If it's 3 projections from your entry to your stop loss, it's going to be exactly 3R. So it's literally like it's literally just helping you identify the RR of your trade, honestly. But yeah, it's basically just helpful for aligning to find high probability draws and liquidity. But bro, please show them again. I missed a screenshot. Oh, my bad. My bad. But yeah, hopefully that makes sense. Like a lot of people don't get standard deviations because there really isn't anything to get other than I am just using them to find the high probability draws on liquidity. Like once again, if something is exactly 2 projections out from the range from my entry to stop loss, I know that that is a high probability likely draw on liquidity because it's exactly 2 projections away. Same with 4 projections, right? And I mean, it kind of doesn't make sense to someone who hasn't backtested the charts, but once you backtest the charts, you realize the market really actually does respect projections like all the time. And so if the market respects it, I'm gonna use it. So that's why. That's why. And you could literally, this is a thing a lot of people don't understand about projections. You can literally use anything you want for projections. Like a lot of people use fibs, and you'll find that you could project out fibs like the 1.61 something. I don't remember the numbers. The 2 point something number. That's honestly, if it aligns with the liquidity pool, a lot of the time that's gonna be helpful projection as well. Like I don't use the fibs, but like a lot of people do, and it's like you can use anything you want that makes sense to you. It's just helpful for finding draws and liquidity. Where am I? Hang on. And honestly, most people are not going to get projections until they backtest it and realize that The market will systematically create a like an order block or a propulsion block or a breaker block that perfectly aligns like 4 projections away from Asia lows or London lows or something like that, and then you realize, oh dang, these markets are that precise. I better start using projections. Yeah, I'm glad that helped. I'm gonna plug in my laptop here. But like I said, you can literally use anything. You can use half standard deviations. Um, that works too. You can use range projections, so like take the accumulation range, project out the bodies up standard deviations and down, and the standard deviations of accumulation ranges are going to be also helpful for identifying good draws and liquidity. You can project out, literally, you can project out anything. Literally anything. You can project out a rejection block. You can project, and you can project it out as far as you want. I could project out a rejection block 16 projections if I wanted to. Because it's all just measuring out your entry to your stop loss to identify good places to take profit. That's all it is. Hang on. Do I have everything I need? I think so. I'm not going to switch my mic from my webcam to my actual mic because, I don't know, it's probably just going to cause issues. So, but yeah, hopefully that makes sense. Oh, it might be lagging. Is the stream lagging? Hopefully not. I'm not going to switch the mic. I don't really care enough. It's fine. So yeah, magneto effect from the SMT of these lows back up to the SMT with YM. And we can find a lot more propulsion block trades. Like, there probably were a lot of propulsion. I feel like there's been a lot of propulsion block trades lately. Actually, there's always a lot of propulsion block trades. Like, here's a propulsion block. Just a bit. Wait, what's... I might just restart the stream. I'm going to restart the stream because it's messed up because I